All right, good morning, folks. Welcome to the Short Vol Show live. And as intimated in the various advertisements for this production, we had quite the move last night down and then back up. Stuff seems to be heating up. You know, the market, it keeps kind of flirting every few days with like this that we're going to have, like, you know, the wheels fall off the cart and this down move, but it never seems to kind of happen. In fact, every time we kind of get a little bit of a down move, it just fizzles and ramps back up. So let's look at what's happening like precisely right now. Let's see, Apple is up about 2 points coming into the open here. Tesla is down. Let's see, 11. But 11 for a $1,800, almost $1,900 stock isn't very much. Microsoft, barely anything. Beloved Lulu, nothing really going on. So essentially, the market's just pretty much come back to where it was. Now, the ES future is seeming a little heavier than the NASDAQ right now, but not a whole lot really going on, as it looks like we just kind of are going to ramp back to the rally again. So another kind of false alarm here overnight, it seems like, in the futures overnight move. But, you know, the VIX, however, has perked up back to life. You know, I dodged a huge bullet yesterday. I got short some VXX and was able to cover it without getting dinged too badly before we had the up kind of move in the VIX with the sell-off yesterday afternoon. But, you know, the VIX has kind of sprung back to life a little bit. Here's a move yesterday from 21 range back up to the 24. And, the spread has tightened. If we take the VIX here, let's overlay the futures on top of the VIX here to see what happened with the spread. And it has somewhat tightened. So let's do add study. Compare with the VIX. And let's see if we can do this a little bit better here. Well, it doesn't show it so well, but maybe if we look on VIX Central, it'll show it a little bit better. But essentially, we had this huge 4-point spread between the VIX and the front month futures, and it's really tightened up to less than 3 points now. And actually, when we look at the term structure here, compare with what we had yesterday, it looks a lot less extreme than it did yesterday. And you can notice the, we still have that dimple up to the election, but and there, there's still almost 3 points between the front month future and spot, which is a huge range here. And, I'm considering, actually, since we are, we've talked about, well, we said yesterday, let me bring myself up here. We were talking about yesterday, well, if you are thinking about shorting volatility, probably wait for some sort of pop. Well, here's a pop. We are off, we're not like on the lowest moment of the curve. So if we pull up UVXY here, we can see the pop. However, in the grand scheme of things, look, it doesn't look like too much of a pop, does it? Just this up here, it erases a couple days of down, but that's about it. I just wanted to mention, I was watching a video yesterday talking about long-term investing and how it's a smart thing to just slowly buy the S&P 500 over time as an investor. And I just wanted to say that I completely agree with that. My channel is more about trading than investing. And yes, it's a smart strategy, I believe, to slowly accumulate like an S&P index fund or something like that over a long period of time. What we're focusing on here, though, is a more a smaller amount of time than, like, let's say if your investment horizon is like the next 10 years, 20 years, 5 years, then yeah, it might make sense to slowly average into a position in the S&P or the Nasdaq, something like that. But if your investment horizon is the next 6 months, then you have to kind of pay more attention to like kind of where we are in the cycle. And this probably isn't if your investment horizon is, or if you're more into trading, or your investment horizon is smaller, then this probably is not the best time to average into anything, because the let's see if I can get my charts going here. Because look at the Nasdaq. I mean, if I can manage to put the right symbol in, there we go. We are on the highs, right? We were slightly off it, of course, but that's the move in the Nasdaq lately. So, yeah, you can make the argument that, well, if you're slowly adding money every month, then if this makes a move back down to here, then your average price eventually will be okay, and this over time is going to move higher. However, this kind of growth in the face of really not too great of an economy seems unlikely to continue to me. And I don't think I need to make that case too strongly to most people. Here is the coronavirus sell-off here, and then look at what we've done since then. So this is like, and the other thing about the Nasdaq, it represents a small number of stocks. It's dominated by Apple. You know the big names: Microsoft, Nvidia, Tesla, et cetera, et cetera. And as we have reached, finally, at long last, the all-time high of the SPX, stuff has started to kind of, well, I don't know if you could say stumble. Look, we see the chart here move up, and yes, there's been lower volume, but it still remains to be seen if we stumble here. It doesn't look like we're stumbling right now, just looking at this chart. Now, this is a monthly chart. If we zoom in a little bit, you might be able to see a little bit more of a, I don't know, 1 day down move or something, but we are in a rally until further notice, right? I mean, that's just the way it is, and saying anything different is just speculating at this point. If we do get a continuation of a down move at all, and then a continuation of that, then there'll be evidence that we're not. But, until that happens, we are in a rally here, right? There's just no other really way of looking at it. You can talk doom and gloom or how this doesn't make sense or whatever, but the trend right now is straight up. And I don't believe it's going to continue that way. But I haven't participated all the way up, and so I don't really want to jump in right now. I'd rather wait for some sort of pullback or try to play for a down move at some point. That's kind of where we are. So, right now, with the action we've gotten overnight, it looks like we're just going to continue to ramp back up. There's not a whole lot of evidence that we're going to get that great down move. Now, it's kind of interesting to see the E-minis down 15 here on the chart. We haven't seen a lot of that, but there's been no convincing down move in the market for a while now that's really gotten any steam whatsoever. So it's very hard to make the case until we actually see some movement to the downside. Now, yes, the VIX has perked up a little bit, and actually it's stayed in a higher level for a while now, but which is a flag. But we all we see is every little bit of down move, we see the dip buyers come in and buy the dip. Yeah, good. Hey, what's up, Edward? Yeah, I think some I believe some S&P options are trading right now. Thus, you see the movement in the VIX. I think some of it trades earlier. The actual SPX is not open, but you do see updates on the VIX right now. Right, we've seen it has been updating. Okay, so the VVIX, Mick Z says, how do we interpret VVIX? So the VVIX is really just the implied volatility of options on the VIX. So it just represents the price level of people who are buying or selling options on the actual VIX. Now, these are hedged, as we like to debate with Edward. These are hedged by VIX futures, the VIX options. And when we see the VVIX move higher, we have to evaluate whether that is coming from put buyers buying downside or out of the money call buyers. If there are out of the money call buyers and that's making the VVIX move higher, we can interpret that to mean people are buying protection for the market, and that could be a sign that the market could go lower. But I like to dig into the time and sales on the VIX every day to see where the move in VVIX is coming from. VVIX has relatively stayed kind of stable for a while now. And if you watch TheoTrade, they would say it's in an elevated state, and anything over 110 is an elevated state. Of course, he was saying anything over 120 was an elevated state a few months ago. So I don't hold a whole lot of stock in the VVIX Mick Z and what it as far as like being an indicator, but what it is it's the implied volatility of options on the VIX. So if you were to go and type VIX into here, and then you were to look on the right side of your screen about 30 days out, so let's say here between these two is 30 days out, that number would be very similar to the VVIX number, and indeed it is. So somewhere between 101 and 121, and we have the VVIX at 114.72. VVIX will not update until the market in VIX options opens. Lincoln Project, that's very funny, Edward. Just because it says Lincoln Project doesn't mean that either I endorse it. I do not endorse the Lincoln. Just because it says Lincoln Project doesn't mean that it has anything to do with me. I am related to Abe Lincoln. However, the Lincoln Project is apparently people who have broken away, Republicans who have broken away from the Trump. Yeah, VVIX. So yesterday I dodged a huge bullet. I was short like 1,000 VXX at one point yesterday. And if we pull up the chart, and I was like, I realized my mistake pretty much as soon as I put the position on, but it was right in, let's see if we can. It was basically like right in here that I got short VXX, and then I covered it right here. So I dodged a huge bullet there. I can show you my trades if you want to see them here. So here I am paying 140. Wait. Yeah, here I am paying. Let's see, order history. Here I am. I think I ended up paying 145, 146 for this spread that got me really short VXX. And then here I am puking it back out at 143. Now, I got lucky to only lose 3 cents on this spread. For most of the time when I was trying to get out of it, I would have had to sell it at like 138. Right now, I think it's probably going to open around 120. So I definitely dodged a huge bullet by getting out of this short. So grateful for that. Like as soon as I sold this spread, when I sold this spread, VXX was trading around 24.20, and as soon as I got out of this spread, it went up to about 24.80. So saved. Preferred pronoun. Was I talking about was I using we to describe myself? Is that what you're talking about, Edward? The royal we. So anyway, so dodged a huge bullet here. I was thinking about rolling the spread out into December, and I'm still looking at the spread right now, this December put spread. So, for example, I was thinking about buying something like the 25-20 spread in VXX. Now that we've popped in volatility a little bit, maybe getting short. However, we'll see if this continues to move lower, the market. I'm kind of gun shy to get short volatility right now, but it's very tough because the market starts to sell off, and you're like, oh, it's finally selling off, and then it just doesn't. So the question is, when it starts to look like it's going to sell off, do you sell VXX then? That's probably a smart move because the market seems to always come back. But if it doesn't come back, then selling VXX is going to get rid of your bullets real quick. So what I compromised to do is I bought some cheapo Lulu put spread. So I bought in Lulu, I bought this August, just really small. I paid $10 for the August 315-300 put spread, so it could be worth $1,500. To pay $10 for something that could be worth $1,500, I think is a good deal. And then just the front week, I sold some of these 315 puts at 10 cents, and then I was able to buy some of these 340 puts, paying 17 cents. So $7 for the 340, 315 put spread. It's probably not going to come in, but if it does, it's a real cheapo thing to do. Warn the idiot masses. I wouldn't short vol. The market has melted up. What goes up must come down. Now, you were the guy that was putting all that had that long comment yesterday about the market popping. Is that right? I'm not sure. Somebody put a big comment about all the reasons why the market's going to pop. And yeah, I kind of agree with you, warn the idiot masses. I haven't been able to get anything going, and maybe putting a small amount of a short on when we get a pop like this was looking attractive to me. But we'll see if this really does pick up steam and we actually sell off. It would be a shocker to me, but I believe that we have to sell off at some point. The 60 calls in UVXY. I'm not sure which month you're referring to here. Anytime you're selling the 60 calls, they have a good chance of being a winner for you. However, if we don't need to pop to 60 for these calls to explode, right? So if you were looking at, I wouldn't want to sell anything less for a premium less than probably $1. So I'd have to go out to I guess those Octobers are new. So the 60 calls in September with 30 days to go. It's a pretty wide market there, 36 cents at 91. See, I don't like this that much because, let's say you sold these at 50 cents. Well, if this pops, for some reason, if UVXY pops to 30, these calls are going to go from 50 cents to $2 probably. And, they're going to go to well above what they were. So I would prefer to sell something a little bit closer to at the money that doesn't have the potential to explode as much. Anything more than 9% dump in the Fed intervenes. Yeah, Spencer says, I'm betting anything more than 9% dump in the Fed intervenes. Yeah, the Fed is probably going to intervene almost immediately, which is this is the frustrating. It's the frustrating thing about this market is it seems like the administration and I'm not a conspiracy. Oh, buy the 60 calls. I got you. Yeah, I mean buying the 60 calls would be. I would like buying the 60 calls in that it would give you the ability to sell a fatter call against it if we pop. So, for example, warn the idiot masses. You buy that 60 call, right, and you get that up move, then all of a sudden you've got that peg and you could sell something like the 50 or the 40 calls for a fat premium against them, and you're protected for that move to the upside. And also, since you own those 60 calls, it reduces it allows you to sell other fatter calls without like totally sacrificing your buying power. Although the Fed can't buy stocks, they can intervene in other ways that support the stock market, obviously. So the fact that they can't specifically buy stocks is doesn't prevent them from supporting the stock market, of course. And another good point from Edward, real sell-offs are usually more than 1 day events. That's true. And, we would look for the VIX term structure to become inverted. If we started to get a day or two of sell-offs, we would look for this term structure to become inverted, for a spot to move above the futures, and for the curve to turn into a smiley face. So right now, all we have is the possible beginnings of a potential sell-off. However, the VIX is popping pretty good here. Well, they can talk up the market. They can also do things like support corporate bonds, which is a way of supporting companies and can potentially rally the stock market. And, the concept of moral suasion is the concept of them coming up and talking up things, which they can also do. The other point I was making yesterday is that the administration does not want to rock the market. So it's much less likely now that the president starts tweeting about, we're gonna put a big tariff on Canada against them importing washing machines. We're going to put a tariff against China. It's much less likely that the president does that now, because he wants to be able to point to the stock market as evidence that his administration is responsible for the recovery of the economy. Although we all know that the economy does not equal the stock market, and the economy in real terms is not doing so great. I know that particularly well because I work in the wedding business. So UVXY indicated up a point here as we move into the open, and the sell-off deepening. Now let's take a look where we got to last night and see, because if we were to break the lows that we were at last night, that would be something significant. I think most of you would agree. So let's take a look at where we got to last night. And it was NASDAQ 11,220. So if we were to break through there, I think that would be kind of a significant level for us. And then let's see where in the E-minis, because the E-minis seem heavier than the NASDAQ right now. So E-mini level would be 33.4475. I think if we break through there and move lower, then maybe we can say that the sell-off might be on. I'm feeling very happy that I am not short the VIX right now, and so maybe I'm hesitant to jump back in those waters. It's kind of more assuring to have some sort of a long premium position on than short premium position right at the moment. Thank you for correcting my understanding of what you were saying on there, Warren the Idiot Masses. Sometimes I act like the idiot masses when I misunderstand what people are saying. Let's see. Stephen Van Meter. That's interesting. You want to put a link maybe to Stephen Van Meter, or actually I can look it up on my own time. All right, so that's kind of where we are, pointing to a potential sell-off on the open today. It would be lovely. I would need Lululemon to drop 20 points to really make some serious money where I am right now. But I have very, very small amount of risk on right now. I think the bankers are like everybody else. You've noticed Fox News kind of not support the president as much as they had been. The bankers are going to go with whoever the winner is in the election either way. So they keep their options open. Does the market even respect the polls after they claim Trump only had a 1% chance of winning? I didn't see a poll that said Trump only had a 1% chance of winning. What I saw the Vegas odds was like, the most I saw was like 60% Biden, 40% Trump. Obviously, the polls have narrowed. I think they were predicted to narrow for a while, but obviously the polls have narrowed. The CNN. Warren the Idiot Masses. I was a market maker for a long time, and I can tell you that we have less power than retail thinks we have. Most of the time, market makers are just trying to stay out of the way. They, there's bigger forces at play than the market makers usually. We're just trying to stay out of the way, and obviously, different market maker firms have different strategies and different positions on, but a lot of the time, market makers are just trying to get out of the way. There's a guy on StockTwits who brilliantly traded the market the night of the election on 2016. His name's Dross. I'll put his name in the chat. This is his name on Andros Forum, something like that. I think that's his name on StockTwits. Check him out. But he was able to scalp futures the night of the election. He got long at the bottom and was able to make big money on the night of the election last time, scalping futures. So gotta have respect for somebody who's able to make it happen. Look at gold. Gold continues to move lower. I think most predictors of the election have been, fairly cautious to predict a Biden victory at this point, just because they were so wrong last time with Hillary Clinton. And I don't think most people have guaranteed a victory for Biden at this point. Obviously, he's still continues to be in the lead, but it's unclear. The kind of like on the street idea is that Democrats in power is bad for the market and Republicans in power is good for the market. I know that the data, if you look back historically at the market, how it did during different administrations, the data doesn't really bear that out. And I don't think we can make broad assumptions either way on that just from what's happened in the past. I have heard though, if you watch, I watched this, what's the guy's name? Mike Myers interview. Is that the guy, the documentarian who was talking about, well, the market doesn't matter. What matters is the real economy, and kind of intimidating that the Democrats would come into power and not really care about the stock market, care more about the person on the street. However, Biden is a very, despite what the president tries to characterize as Biden being this radical left guy, Biden is a very establishment Democrat, and in many ways is not so different from Republicans. His donors are many of the same people that are donate to the Republican Party, and saying Kamala Harris is a radical, the farthest radical left person is also untrue. Most people know that someone like AOC is much more to the left of Kamala Harris right away. And, one of the reasons that the Democratic Party picked Biden was because he is more friendly to those corporate interests. Remember, both political parties are just groups of rich people who are trying to sway the government in one way or the other. And so I think, a Bernie Sanders being elected, this is obviously pretty obvious, but let me just say it anyways. A Bernie Sanders being elected or an AOC being elected would have much more dire implications for the stock market than a Biden. Biden is friendly to corporate America more than those other candidates, and that's the reason why the Democratic Party picked Biden as a candidate, because he was more likely to be elected, because he is more on the side of banks and big corporate interests. than these other people. That being said, you know, the general understanding is that the Democrats winning would be worse for the stock market than the Republicans. Now, whether that's borne out in history or not, that's the feeling, and the market may react in that way. However, you know, I don't have a very good track record of trading on the election, so I'm probably not the best person to talk about that. So we'll see if the sell-off is real today or not. Probably in the first couple hours. If what usually happens, this will be another buying opportunity, and we will quickly correct and move back up. So with that in mind, I'm considering a strategy of actually selling a little bit of volatility here as the VIX has moved higher. And let's see, Warren the Idiot Master says, I think this is a huge short squeeze, and that's why the VIX is elevated. Well, the VIX being elevated definitely is evidence that certain people are nervous about this stuff. But I don't see, I think that this rally that's been happening for such a long time is too wide of breadth and too long of a time to just be shorts covering. I don't see it as all these shorts covering. I see it as many people, investors, a wide group of investors continuing to invest in the market. Remember, there's people all over the world that have money to invest, and there are limited options for them, right? The bonds don't provide much of a yield. It's not really worth it to put your money in a savings account when it's getting like this very small yields. The best place, the best option seems to be the U.S. stock market for many people. So I don't see this rally as a short squeeze personally. Obviously, you're welcome to your opinion. Everybody's opinion matters. Mine just happens to be slightly louder because I'm the one behind the microphone in this particular spot. Who am I telling viewers to vote for? I wouldn't jump in there. I'm not telling viewers to vote for anybody. I'm not going to jump into that. Forget that. I have viewers on both sides of the aisle, and who they vote for is their business. Hey, what's up? What's up, Greg Gossett? I've come on, Greg. I've come on the channel a couple times recently, but I haven't always announced my arrival because I didn't want to kind of interrupt your thing there. But I've definitely been on the channel a few times lately. Yeah, so I'm not going to tell people who to vote for. That's really up to you. People who follow me for a long time kind of know my political leanings. They're pretty obvious. And we've got 20 seconds until the open. So I'm going to let you go. It's kind of exciting. It would be really exciting if we continued to see a sell-off here. But if we continue to form, this will be bought at some point and we will rally up. So that's my expectation. We are rallying until further notice, until we see more evidence that we're not. So here comes the bell. There it is. I'm going to let you go. Thanks, everybody, for watching. XLF. Yeah, XLF Financial is going nowhere. I think it's significant. I think it makes sense. You know, the economy is not doing well, and it's got to be reflected somewhere. Don Kaufman talks a lot about XLF being an important indicator and certain areas of the XLF being very important for where we go. I kind of agree with that. All right, I'm going to let you folks go. Thanks so much for watching, and we'll see you again soon. We'll see if the sell-off is for real. Until we see more evidence, I'm skeptical. Nice chatting with everybody. I'll talk to you soon. You're watching Famous Games. Thanks, Edward. Good luck, everybody.